Hi, and thank you for joining us here at Tax Talk UK, where we talk about all things tax and consider other important aspects of working for ourselves, being self-employed, running a small business. So today I'm going to talk about how to write off bad debts in your Making Tax Digital software. Before I do, if I could please ask you to take a moment to subscribe to our YouTube channel. That way you'll easily be able to refer back to this information if you should need to, as well as being able to find other information that we have available on a whole host of different topics, including our bite-size demo series for the specific software providers, which you can find in our playlist. So back then to how to account for a bad debt write-off in your software. So we will have some specific demos shortly on the actual individual softwares, but just to talk through what you're trying to achieve. So you will remember from the information that we gave on bad debt. So a bad debt is when you expect payment. It's not a goodwill gesture. It's not something that you've agreed. It's not an error to be corrected. Any of those things, you would simply raise a credit note against your invoice back to the sales code that it came from. But in this scenario, your customer should have paid you. There's no reason that they haven't. You're not going to be chasing payment anymore, and you want to write that off out of your accounts. So quite simply, there's two different ways that you can do it. Different things seem simpler to different people, and depending on the scenario, so whether you were writing off lots of invoices from one customer or client, or lots of invoices from a range of customers or clients, may determine which is the easiest option. Both will achieve the same thing. What we're looking to do in effect is remove that sale from our accounts. Now, just to mention, if you're VAT registered, there are rules to make sure that you follow before you can claim the bad debt relief. I'll pop the link in the description so you can check that you're able to reclaim the VAT on that transaction if you're VAT registered. But just to keep on the actual how we're going to enter that information to get the accounts correct. So currently you've got an invoice on one of your customer accounts, and you want to remove that invoice from your account, but you want it to show that it was a bad debt. So we talked before about the reasons for that. But you want to be able to look on that customer account in the future. You want to be able to see that they, if they came back to you, that they had, you had a bad debt written off previously. You may choose not to deal with them, and some of the software will allow you to put notes and blocks and such on a customer's account. So simply you could use the credit note function, but instead of using the category or the product of the original service you provided, you can have a product set up for bad debt, so that when you raise the credit note, that automatically puts that transaction to the bad debt category. So you still have your sale that was originally made, because you're not putting the credit note back to that to offset that. So the sale is still in the account, but the credit note effectively will show a bad debt offsetting that, but it will show that it's a bad debt. So that is one way that you could do it, and this can be nice and straightforward. And particularly if you've got one customer who has several invoices that you're having to write off, then you could just do one credit note to the bad debt code that covered all of them. And again, if you're VAT registered and you check the guidance and you are able to claim the bad debt relief for the VAT, then you should make sure that the VAT code is the same as was on the invoice. It's just a category that should be to your bad debt write-off category. So that is one way that you can do it. Another way would be to use something like your petty cash bank account, and to receive payment for that invoice through that petty cash account. If you do it this way, ensure that on that transaction, on that receiving of the payment, you put a note in the memo to say that it's a bad debt write-off, because you don't, if you're looking at it in the future, you don't want to be thinking that your customer paid when they didn't. So then what that will do is that will remove the sale from your customer's ledger, but not yet from the accounts. You've still got that sale in those accounts, it's just not yet on the ledger. And you've also got this balance in the petty cash account. So now you're going to do a payment from the petty cash to the bad debt category for the same amount. And the same with the credit notes. If you're VAT registered and you're able to recover the VAT, then you should use the same VAT code that you used when you were invoicing. So if you can see and follow each of the different options, you will see that both have exactly the same end result. And so it's fine to use either, whichever you find easiest. So we are taking that balance out of that debtor account, off of your customer's balance. So your customer's balance will no longer show that, because again, if you remember that if you're writing off a bad debt, you're no longer chasing it, so you don't want it on there anymore. You're also reversing whatever happened initially with the VAT, as long as you're able to do so. And you are you're leaving the sale in the accounts, but you're actually offsetting that with a bad debt expense. So hopefully that helps to explain what you're trying to achieve. And as I say, in the specific softwares, we'll show some actual demos of what you need to be doing so that you can see. Thank you for watching. Goodbye.